Hello guys and welcome to Coin Engineer. So today I want to show you guys how to be profitable in perps trading without having any background in trading at all, whether that be crypto or stocks. So without talking any further, let's get right into the video. The first thing that I want to talk about is when you're doing any type of perps trading, it is very important to keep three things in mind. The first thing is you want to keep it simple because there's millions of different strategies that you guys can use. And a lot of these strategies, if you guys will notice, gets very complex. So I can also show you guys how to study the charts, the price action, and all that type of stuff, but none of this is going to help you, especially if you're a beginner. So what we want to do is you want to really keep it simple, because if you look at the big money, what they really do is they only use three indicators to basically trade. And that is exactly what you want to do when you're doing perps trading as well, because perps trading does bring more emotions into the game. So you really need to control your emotions and really be consistent in your system, which means you want to follow these three things. You want to keep it simple, you want to keep it consistent, and at the same time you want to get your emotions out of the game. And in order to do that, you need to make sure you're writing down your trades. You do need to write down your P&Ls after each trade and treat it like a business. So I have my Bitcoin chart pulled up over here. What I'm first going to do is I want to show you guys the tools that I'll be using in this video. The first one is the trend line over here on the top left, if you guys can see this. And if you guys don't have access to TradingView, which I did mention in some of my previous videos on how to use it on mobile, currently I'm using it on the desktop, you guys can go ahead and sign up to TradingView. I will be leaving a link down in the description. However, if you guys don't have this, there's tons of other free tools that you can use to do this, and I'm pretty sure you guys will also have access to these in your exchange or possibly in the DEX that you're using. So let's talk about which tools that I'll be using. The first one will be the trend line that you can see on the top left, which is the one over here where I can just click and draw a trend line. And understanding trend lines comes from this. If you see any type of trend, whether that be in the 15-minute, the 1 hour, or the 4-hour time frames, you can basically just draw a straight line, and if you see a couple touches to this trend line, that's what it will make it a trend. So for example, if you were to see over here, I have some sort of a trend forming here because I see 1, 2, 3, 4, 5, 6 touches, and it doesn't always have to be perfect, and sometimes you can see deviations like this where you will see the price sticking out and giving some sort of a fake out. These are all normal, but all these touches still makes this a valid trend. Now let's talk about our second tool that I'll be using. I'm going to go ahead and delete this one. Our second tool is going to be our Fibonacci's. So I'm going to go ahead and click on the Fibonacci's and just draw a random Fibonacci here. It doesn't really matter where I'm drawing it, because right now what I want to show you guys is the way that I have my Fibonacci set up. So I want to show you how you can get yours to look exactly like this. What you need to do is go into the settings and select only these three options. You can have the others selected, but just keep in mind all of that is going to just give you extra noise. These are the main ones that you really need to use, and I'm going to show you guys exactly how to use that as well. And you can feel free to color it like I did mine, so when you click this you can change the coloring behind it. Before I show you guys the strategy, I want to quickly show you guys about taking a long position as well. You can basically go over here, click on this button over here where you will see long positions or short positions. So these are the three tools that you need. You don't really need anything else here. And in order to keep it simple, this is going to allow us to both write down our trades, keep it simple, and also keep it consistent. So what I'm going to do, for example, is I'm going to click this long position, click this here, and this will allow me to drag this up and down and be able to write down my trades and see what kind of a trade that I'm taking, my entry, my stop loss, and also my take profit points. So let's start with the first one. The first one is our trend lines. In order to use the strategy, what you need to do is you need to just keep it simple and draw your trend line. So the first thing you need to really understand is what time frame are you trading. So if you're trading on the 15 minutes, that does generally mean you need to come take your measure and really understand what type of time frame you're working with. So if you can see over here, this trend has been going on for the last 4 days. And if you were to go back and look at our last trend before it broke, so for example, let's look at this one over here. This was a trend over here before it broke right around here. and we can see that it took about 5 to 6 days for this trade. So what this really means is if you're on the 15-minute time frame, you want to do some sort of a daily trading. So you want to be in and out in either in that day or sometime within the next day. Preferably daily trading or some sort of scalping will be much better on the 5 and the 15 minutes. And if you go up to 1 hour, that can give you a little bit of a better of a confluence in the weekly. And if you go all the way up to 4-hour or 8-hour time frames, that is going to give you a better perspective on the month. Understanding time frames is very crucial here. You do need to make sure you're going into your time frames and analyzing them correctly. So another thing you can do, for example, is you can start from the upper time frame, starting from 4-hour to 8-hour. Some people will even start to go to daily, which can give you a much larger confluence, like all the way up to a year and even more. So what you want to do is you want to basically go up from the upper time frames coming into the lower time frames to make your confluence even stronger. So in order to do this, what you can do is you can go on the daily, for example, and see if we have any trends forming. And you can see over here that we have some sort of a trend here that has been forming. What we can do is we can start from here where we've been starting to get the action and see it's been almost 2 years where we have been having this uptrend of a bull cycle. This is very important for you guys to understand because this can give us a better confluence in terms of understanding where the trend actually is on the larger time scale. Because if you can see, we have 1, 2, 3, 4, and 5 touches here, which makes this a valid trend. I'm gonna go ahead and go into the 4-hour time frame. And if you go into the 4-hour time frame, I can see one of my latest trends over here. And if I see this, I can see this trend has broken, which means we do have some sort of a chance of coming down in Bitcoin. So for example, if you want to see once we break this trend, what price will be coming down to, we can use our Fibonacci tool. So in order to do this, what I want you guys to do is take your Fibonacci, go from the lower part of the trend to the upper part of the trend. And now if you guys have your Fibonacci set up like mine, you will be able to see your points here. So the first one will be your 0.5, the second one being your 0.618, and lastly we have our 0.786. So it is important to understand here your 7.86 kind of treats like a stop loss. So if you go anywhere below this, which sometimes does happen which we call fake out, so the price could, for example, come down all the way here after retesting this trend and then create some sort of a downtrend and basically give us a fake out and really come up really fast, taking support from here to continue, which we do see very often. So it is really up to you how tight you guys want to make your stop losses. This doesn't mean it is a guaranteed strategy. However, it is one of the simplest ones that you can use, and most of the time what will actually happen is the price will come to the 0.5 to actually return from here. You might not even see it to 0.618 to 0.786. The other thing to keep in mind is you will see a lot of YouTubers mention the name the golden pocket. The golden pocket is actually the 0.618 zone. So a lot of people like to pick things up from here and put their stop losses a little bit under this 0.786, and they will actually make it not as tight to make sure if there's any sort of fake outs, they don't get shaken out. So it does come with risk when you're doing any sort of perps trading, but however, keep in mind you can also use this strategy to DCA in as well to make sure you're DCAing into some sort of zones. So if you were to, for example, take a look at our previous price, so if you were to, for example, take a look at our previous trend, what I can see is the trend has broken somewhere around here. So we had a trend where we had about 1, 2, 3, and almost a 4th touch before we came back for a retest to then create some sort of a downtrend. If you look at it over here, you can see that we have some sort of a downtrend before we broke that as well, coming back for a retest to then create some sort of an uptrend. So if you guys want to understand where to actually take profits, so let's say you were able to go in at the golden pocket here, what you can do is you can go into your Fibonacci, go into settings, and enable these options: 1.618, 2.618, and 3.618. These options are going to give you your take profit zones, and I'm going to show you exactly how to do that. If you guys want to, you can change the colors of this to green since they are your take profit points. So you can do this. You can also play around a little bit with the color. So for example, since this is my first take profit, let's do it a little bit light green. Let's do this a little bit darker, and let's do this one kind of darkish green. So if I were to do this, you can see I have those points here. So what I'm going to do is I'm going to go ahead and delete delete this one. And let's say this is my entry. So I'm going to take my long position from here and then put my stop loss around here, which will be below my 0.786. So you guys can redraw this to understand where your stop loss will be. And my take profit point will be somewhere around here. So what I can do is I can take my Fibonacci again, go from top to the bottom, and then I can see this will be my first take profit point at 135k. So this will give me a very risk to reward ratio, which I will be getting around 1 to 5, which means I can actually even further my stop loss below the last point to make sure that sometimes what happens is you get double bottoms. However, since we are on the higher time frame, it is really not likely. So in order to follow the trend, you can actually make it narrower. It's really up to you. It really depends on your risk tolerance. But this will be your first take profit point. You can have a second take profit point of 174k and a third take profit point of 212k, which is pretty big, I know. So for that reason, what I will do is I will more guarantee myself the position of just keeping it at the 1.618. One thing you can do for sure is you can take about 80% of your profit here and leave the other 10% for here, if that gives you a little bit of an ease of mind. I'm going to quickly go back into my settings, delete these, uncheck these to make sure that they're not really getting in the way. I can also go ahead and delete this as well. And let's go into a smaller time frame real quick to really see what is happening down here. And one of the things that I can see here to really understand where I will be getting back up to is I will actually take this Fibonacci from top to the bottom, right? And I will look for my 0.5 zone, which is around 107 to 649. And this will be 108, 678. So this is around where I will actually be coming up to, most likely for a retest before we go down for this downtrend. So this is, again, if there is still a possibility that we might actually start breaking this and get back into the trend line, which does happen sometimes, that does mean you do need to hedge your risk and make sure you're putting some sort of a stop loss. If you're going on a short here, that you're putting it somewhere around here, because we do have very bullish news coming on for this month, and it is very possible that we could still see some action in Bitcoin. However, what I personally think will happen is we will get some sort of a consolidation of a downtrend in Bitcoin, which will give room to altcoins. We will really need to see some sort of an action coming from Ethereum or Solana, at least Ethereum going up to 3k and Solana going to $200 zones again. And again, guys, just keeping it super simple, I want you guys to just draw your Fibonacci's, draw your trend lines, make sure if you're taking a trade, you're also hedging your risk by opening a long position, setting up your stop losses as well as your take profit points. If you're also opening a short position, you can do this as well as the other way around. So in here, in this case, let's say I'll be taking a short position. I can kind of just set this up over here and write down these trades. So this way you can know if your trade worked out or didn't work out. And at the end of the day, you can go ahead and write it down, track it on some sort of an Excel sheet, and treat it like a business where you can have a system to kind of consider how is your trading been going and really see for yourself how this is going to affect you in the long term. So that is it for today's video, guys. I just wanted to keep it very simple and show you guys the simplest strategies you can use for perps trading. And keep in mind, guys, with this trading, I want you guys to not go overboard. So that will mean around a 10x max for Bitcoin, and I will say about 4x to 5x on altcoins. I will say maybe for Solana and Ethereum you can go a little bit higher, but definitely for things like meme coins, definitely don't go anything above 3x. And depending on the volatility of the coin that you're trading, you really want to lower this down. Ideally, what you want to do is maybe even a 2x or a 3x, start up with something small until you can actually build your confidence and your risk tolerance to something higher. Once you have more money to play with, you can actually go back and start considering to increase your leverage. And the second thing that I want to talk about before I end the video is make sure if you're making any profits, take a portion of that money out. Make sure you're taking some of those profits out and bring your risk down. So that means if I'm starting my trading account with something around $50 and I somehow got up to $300, $400, $500, make sure you're taking about half of that money, so you're lowering your risk down again. Don't go overboard. If you were trading with $50 on day one and all of a sudden you're trading with $500 on day 20, you're gonna get wrecked, because this is all all about an emotions game. You will one day do one mistake, and that will be the day where you get your entire portfolio wrecked. Because trust me guys, I've been there many times. This is how this market works and how it's been designed. So be very careful in your risk tolerance as well as hedging your risk. That is the most important thing. And that brings today's video to an end. So let me know if you guys have any questions down in the comments below. And if you found this content useful, don't forget to like and subscribe, and I'll see you on the next one.